Before we dive into today's analysis, let's quickly look at what happened last week's gold outlook. In last week's breakdown, we highlighted this 4-hour demand zone as a key accumulation area, aligned with the rising channel and Fibonacci retracement. We also outlined a bullish continuation scenario, targeting TP1, TP2, and potentially TP3, provided structure held. As you can see here, price reacted exactly as expected. Gold respected the demand zone, formed higher lows, and then broke back into bullish momentum. From there, price moved cleanly into TP1, continued higher into TP2, and is now pushing toward the upper range, validating the broader bullish structure we discussed. Now, let's look at this week's gold outlook. Kindly like, subscribe to the channel for more update regarding analysis. All right, let's break down gold, XAUUSD, and walk through the trade plan for the coming week. Starting with the higher time frame structure, gold is still trading inside a clear bullish ascending channel. We've respected both the upper and lower channel boundaries multiple times, which tells us the macro trend remains bullish, even though we're currently in a corrective phase. Now, zooming into the 4-hour time frame, price recently rejected the upper channel resistance and is now pulling back into a key confluence area. This zone is important because we have three things lining up here. 1. A 4-hour demand zone. 2. A bullish breaker block 3. The mid-range of the ascending channel. This area around 4,430 to 4,480 is acting as a decision zone for next week. From a Fibonacci perspective, the pullback is holding between the 0.382 and 0.618 retracement, which is exactly where we want to see buyers step back in during a healthy uptrend. Now let's talk trade scenarios. Bullish scenario, primary bias. As long as price holds above the 4-hour demand zone, I'll be looking for bullish confirmation on the lower time frames. Things like strong rejection wicks, bullish engulfing candles, or a break in local structure. If we get that confirmation, the upside targets are very clear. TP1, previous highs near 4,550. TP2, channel continuation toward 4,600. TP3, extension target near 4,650, aligning with the 2.618 Fibonacci extension. Now let's align this with fundamental analysis, the macro picture. Starting with NFP, the most recent jobs data showed slowing employment growth, but not a collapse. This keeps the Fed cautious. A softer labor market supports gold because it increases expectations for rate cuts later in the year. Speaking of the Federal Reserve, the message is clear. Policy is now data-dependent. The Fed is not rushing to cut aggressively, but it's also no longer hawkish. This environment tends to cap the US dollar, which is supportive for gold prices. Next is geopolitics. Ongoing global tensions, particularly in the Middle East and broader geopolitical uncertainty, continue to create safe haven demand. Even when markets temporarily ignore the headlines, gold remains bid underneath because institutional money uses it as a hedge. And finally, the big catalyst ahead, CPI. The upcoming CPI release is critical. If inflation comes in softer than expected, it strengthens the case for Fed easing, which could be the trigger that pushes gold through resistance, activates TP2, and potentially opens the door toward TP3. However, if CPI surprises to the upside, we could see short-term volatility and a deeper pullback. But as long as price holds above the 4-hour demand zone, the bullish structure remains intact. So heading into next week, gold is not a sell for me yet. This is a pullback within an uptrend, and I'm only interested in longs after confirmation, not guessing bottoms. Let the market come to your level. Manage your risk And remember, no confirmation, no trade. If this breakdown helped, drop a like, subscribe for weekly gold setups, and I'll catch you in the next one.